Okay, so the market's been bullish, right? Okay, towards the beginning of June, we started making, just pushes to the upside with this breaking structure. But we had this massive high sitting out here, or this major high sitting over here from May 23rd, and that was at 19,022 and a half. The market broke through that area, that major high there yesterday on June the 5th. So what I'm going to show you is a trade that I took June 6th. Okay, it was a short opportunity. All right, and yes, and looking at the global direction of a higher base off of a higher base chart, we are bullish. Okay, because we haven't taken out any significant lows or any areas of structure that would give us an idea that the market is trying to change or reverse. Right. So, but what I did see on my 60 range chart, so I moved from 120 down to a 60 range chart, and I saw that we started taking out a bit of structure to the downside. We broke below this area here, pushed down, pulled back, broke structure again below 19,056. And so this became a supply zone. But be mindful, again, like I said, on the 120, we are still bullish. Okay, we're still, looking like we're going to continue pushing higher. The 60 range is starting to break down, move down to a lower base chart like the 24 range chart. You can see that we're, breaking lower. So what I was looking for, because we were breaking structure on the 60 range, even though we're still bullish on the 120, a lot of people always ask, can you trade in the opposite direction from which the higher base chart is actually showing you? I always recommend staying in the trend and staying in the direction of the market on all your charts, okay? But if you know what you're doing, you're more experienced, you're seasoned, yes, you can, okay? But just keep in mind that those trades may be short-lived and then it may not play out for long, moves or big moves. Not to say you can't scalp for 20 and 30 points at a time, but like on this trade here, I'm going to show you in a moment that I took on the NASDAQ around about 1050 or 1040, I should say. But it was taken off of, again, 60 marked up zone here, supply area here, and then I moved down to my 24 range, which we'll take a look at again here in a moment, or take a look at in a moment. It was like for like a 19 or 20 point pickup. So we're going to take a look at the trade that I took. It was like a 19, like I said, 20 point pickup. And what I did was I marked the supply zone up off the 60 range chart, just moved down to 24. This was the trade that was taken right here. I got into a trade, I closed it out real quick because I wanted to get into and sell a little bit higher up versus, being down here. So it was from here to here. So I canceled that trade out real quick right here, the first one I took. But anyways, what you see on the 60 range, again, tapped in here. This is unmitigated, meaning a clean, untested zone right here, fresh zone. We tapped into it from the 60 range chart. And then if you notice here on the 24 range chart, when it pulled back to that 60 range demand area, all right, there was also a zone within the 24 range, all right? So that just draws up more confluence for me to have interest in getting into the trade. So I saw that, I waited for the rejection pretty much, and when I got the rejection, basically what I'm looking for is a break and close of a candle. You can wait for structure to be broken to give you more confirmation, like when it broke through this area below here at, let me make sure here. Below here at 19,080 or 79, and pull back to this area right here, you could have went short. So it gave you two opportunities. One here, broke, lower, came back, another supply zone sitting right here, and you could have went short right there. But I caught the first one when it tapped into the 60 range R, and then this being a 24 range supply area right here, if you can see it. Right here, rejected that area and went short, and I should have held it because it actually went down to 19,000 right here at 19,032. So you can see it here on the 60 range as well, where it broke this area of structure after rejecting off that 60 range supply area there. But again, if you look at the higher base chart, then you can see that we're still bullish to the upside here. So even again, like I mentioned, even though we are bullish on a higher base chart, okay, 120, or maybe you're using time-based charts and you have a higher base chart, whatever that may be, looking further out, the bigger scope, the bigger picture. If the market on a lower base chart hasn't really hit an area, a major area of support underneath it on a higher base chart, then, you can look for directional moves to the downside, counter trend, if it's breaking structure lower on the to the downside on a lower base chart. In this case here, we pull back to the 60 range supply area, even though, again, like I said, we're bullish on 120, but this is a nice untapped, unmitigated area of supply right here. So I'm aiming back down here into the lows, but I have to be mindful, because if we look out here on the higher base chart, you can see that there is this major broke structure right here above 19,023, or say 24. This is an area of support resting right here, so the market can reject that. And right here, you can see in this area here, it rejected right here at 19,017. You look at the higher base chart, that major high resting right here was at 19,022. So it broke or tapped right into that, and now it pushed. Well, as you can see now, the market had pushed up right here. So I'm not sure if it's going to continue pushing higher above. It would have to take out, say for example here, if it took out this area here at 19,107.25, then it will be breaking some area of structure back to the upside, but not the major, not the major high right here, resting here at 19,124, but that would be a minor breaker structure higher right here. And it could possibly look for a pullback to go long, because then we're back in sync with the higher base chart to where the market will hopefully continue pushing higher. But again, that high is resting. You can see the high for today right here, 19,124. That's the high, that's the major high right there. These are internal areas of structure or minor structure in between. This area right here, that'd be a minor structure break to the upside, as well as this area right here if it breaks higher. So and it looks like it possibly could. Not sure what it's going to do. It may, reject where it's at and maybe wanting to push lower and test and fill some of these gaps in here on the higher base chart back to the downside. So right now, again, like I said, it's smacking up against support on the 120 range chart. Let me take a look here to see. Yeah, I mean, it can reject right here where it's at. You see this high volume area here. It can reject this area and want to try to push lower, because this is a area of even supply on the let's see here, on the 120 range chart. So it can project where it's at, and right around this area here of 19,070, and maybe want to push lower. So just have to pay close attention to what's taking place as it is taking place on the charts. So just kind of stay in the swing, with the higher base chart. If you're, again, a new trader, someone that's starting out, whatever your higher base chart is, and move in the same direction when you start checking your trades from a lower base chart, and that won't get you caught up. So again, because we're bullish on the 120, then I would be looking for some structure breaks to the upside or back to the upside. So for example here, we don't have to really well, here's a structure break. Well, I would wait for this structure break up here at the top right here at 19,106 or 107 right here. All right, now it's forming an area where it could break, like it pushed up here, it pulled back. Okay, so it could actually break above here at 19,076 and maybe a pullback to go long. But just be mindful. You have this major high resting right here. You have a minor area structure right here, minor area structure right here. Lots of times what you'll see is if we're hitting against a major area of support on a higher base chart, and the market is, the overall market is, in this case here, still bullish, then what you can do is just wait for wait for a structural break to the upside, which if we broke above here at 19,076, then it'll look something like this right here. I'll show you. We broke higher, taking out this area right here. Then if we break higher and then the market comes back and we have this supply area, this demand area resting right here, then, and it's untapped, okay, unmitigated, untested, then you can look to go long. All right, and hopefully that the market will continue pushing higher, taking out all this area structure right here, which it probably will. If it comes back and it breaks this area here and comes back, it may want to push higher and take out the high and run that 19,124. But the market's going to do what it wants to do. I'm just kind of speculating based on, that's what trading's all about. Being able to read the charts of what's going on, speculating on the movement of what the market's going to do next, in a sense. Okay, but it has to unfold. So if this unfolds to be a beautiful area of a setup for a beautiful area of demand, then I would be looking for maybe something like the market to do this, pull back, this be a demand zone resting right here, pulls back, rejects it, boom, breaks to the upside, and look for this to maybe capture this 125 area here at the top where this major high is. But so hopefully that makes sense to you guys of why I took this short here. It was a counter trend move, but it was a beautiful counter trend move. I did notice again that we had support resting on the higher base chart below me at 19,000, what I say, 122 right here. That was the high from May 23rd, which we broke yesterday, June 5th. And so I noticed that was below there. So, you know, the market could test that area and bounce and reject, which it did. It did that towards the close of, at 2 o'clock today. All right. So, you know, the short, I was still good on taking that short and noticing what was going on the higher time frame chart and noticing on scaling down to the 60 range, that supply area there, and then scaling down further. So you have to take a top-down approach, step-by-step point of view when you're trading, and try your best not to take trades off of just, you know, extremely higher base or higher time frame charts, because you may get caught up to where the market is, you know, kind of, you know, it's push and pull, so you don't want to get caught up to where you're taking a lot of drawdown and then you close out and then the market goes in your direction, and then, you know, you get up, you know, you get kind of frustrated because you lost money when you could have stayed in trade, right? So all I'm trying to say is look for better opportunities and trade setups by moving down the lower base charts. But hopefully that makes sense to you guys, okay? Those that have been following the channel for a period of time. If you're a new trader, someone starting out, someone just getting interested in trading, please spend some time to watch the videos on the channel. Lots of valuable content there. Get a pen, pad, take some notes, maybe even become an elite member part of the channel. You can find the elite subscription, or I should say subscription, the elite membership to the channel. And basically what it is that you are supporting my efforts as a content creator, but what you receive in return are rewards or perks through the YouTube membership program. So it's a tier-based program, and for $6.99, you know, a month, you get the trade breakdowns where I go into detail about my trades, showing you stop loss placement and talking about my profit target areas. These are trades that I actually took. Lots of them, most of them I posted over in the Discord community, but I break them down for those that are part of the private community, because I know you guys are really wanting to get a full understanding, because you are, you know, you're paying for a level of service in a sense, even though it's a very, very nominal, you know, amount of money. It's not much at all, but still, by supporting the efforts, I'm giving something back in return. So, and plus you get the video playlist to where I've hand selected a list or a series of videos that are just pretty important videos, probably some of the most important ones on the channel that cover the strategy and the breakdown of it. All right. But outside of that, if you're a first time viewer and you haven't subbed to the channel yet, please take the time to go ahead and sub by clicking on that subscribe button. Make sure to turn on or click on the bell so you can turn on all your post notifications. And last but not least, if you found value in today's video, and maybe you possibly even took that same trade setup right there, and that was on June the 6th, right there around 10:40 a.m. in the morning when it pulled back to that 60 range demand. If you did, leave me a comment down below. I'd like to hear from you guys, or let me know what trades you actually took on June the 6th. Take care. I'll see everyone in the next one. All right, so this is the short I took on the NASDAQ. Got in at 19,098.5, stop at 1907, and my target profit at 19,079.5. And the market actually gave a little bit more than that. It actually came down and broke the low down there, resting at 19,032.5. But I went ahead and took my profit, close to 20 points right there on this trade here. And I just want to show you, I'm looking at the 60 range, showing you, you know, the area from which I took the trade from. I just showed you where it was marked up on the 60 range. There was that supply area there, as well as over on the 24 range. So this was just a multi-chart confluence setup right here.